Hi everyone. Today let's go over the longer term charts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with SPX, on the weekly chart, you can see the vicinity that we're in. We did get down to that 235 range a couple of weeks ago, and I'm still looking for the bottom to be right at the top of the pre-COVID highs here in February, right around 3,400. And that pretty much checks out. So if we fail off of this level and we make a slightly lower low right at that 34 level, that would be the pre-COVID highs. And then at that point, I think we're going to start to slide along this trend line that we had here, which is the same trend line that we had in December of 2018. There was a couple interactions during COVID. We also had some interactions here in 2015, and it did mark the highs here in April of 2010, the general trend here in 2011. So this trend line is very powerful. It's been interacted with a lot of times, and I would certainly expect if we got to this level that would be a solid bottom for the SPX, and it just happens to coincide with that pre-COVID high that we had in February of 2020. In terms of where this current rally is going, it seems pretty exhausted to me. It seems like we might go maybe another 100, 150 points here on the SPX at most, maybe slightly retest those highs, but then I would expect it to fail from there, if not fail right from where we are right now. So you can see that trend that we're on. It's continuing down, and like I said, I'm looking for that 3,400 to be the bottom. Moving over to the NASDAQ, similar story, similar trend, slightly weaker overall in terms of upward movement on these rallies. Same weekly close, got that doji slightly falling. I will say that momentum is slightly bullish, kind of surprising after the little bit of a rally that we had. It almost looks the same as what we got here in August on this big rally, at least right at the beginning, but we've already covered a lot of that ground. So you could certainly argue similarly to the SPX that we're going to go just a few points higher, but I really think that you're splitting hairs on the upside and that we really need to be looking to the downside for where the majority of the movement is going to be. Again, we have this trend line down here, which has marked several bottoms in the past, going back to 2015, 2016, 2018, and then 2020 here on the NASDAQ. And if we did come back down into that level right around 10,000, slightly above 10,000, 10,300 maybe, that would actually be very close to the previous lows that we had here in October. So that would mark a double bottom in the NASDAQ, which would be the same level that we were here in July of 2020, again here in October. If we get a bounce from there, that should be the bottom in my opinion. Moving over to the Russell looks like it's already bottomed in my opinion. Hit that 6,500, double tap that same region, so it looks like a solid double bottom. That level was actually already below the pre-COVID highs, which was slightly below the highs here in September, so very different structure in the Russell. Then we had this big Wyckoff pattern that we had at about 2250. Where we are now, again, similarly, I might expect to get a retest of the 55 EMA here on the weekly, which is expected to be about less than 100 points higher than where we are right now. So maybe 4 or 5% at most. And then I would expect to come in and retest this and make a slightly higher high here on the Russell. Again, retesting that pre-COVID high, a little bit further down on that support level, maybe around 1,700 or 1,720. Moving over to the NASDAQ divided by the S&P 500, just so you can see that ratio and which one makes more sense in the short term. The NASDAQ continues to look weak in the face of the SPX. We got a big green bar here 2 weeks ago, and then we got that hammer here to the upside. And it just looks like this is going to fail. We touched that 9 EMA, got back down to this level, and it just seems like we're going to continue down in this direction. Maybe a retest of this level, and then a continuation down is what I would expect. So the SPX should be a better performer than the NASDAQ. So keep that in mind as you're trading this week. And then moving over to the SPX versus the Russell. Had 2 big strong weeks in a row, basically continuing to go sideways on this general meandering trend here. Not much to say. SPX or the Russell shouldn't really make too much of a difference. You might be able to make a small argument that this is still slightly bearish here, but either way, it's still very flat, and it's been flat for basically the whole year. Moving over to the SPX divided by the M2 money supply. Very important chart. I look at this quite often. On the weekly chart here, though, what it's telling us is that this rally is basically done. So we had previous highs here in August, similarly here in March of 2020. And that trend is pretty clear in my opinion. It continues to the downside. Very clear retest of that trend line. It just seems like we're going to go back to this previous level. So this isn't quite the same as the other charts. This is a sideways moving chart because it is a ratio. So I don't expect it to make new lows the way that we did from June to October here. I would really expect it to come in and retest this same level, a level that we've interacted with many times before here in 2018, here in 2020, throughout 2015 and 2016. And then here in 2003, tested that level several times in 2002, and then once again here in 2003, just slightly above the bottom here after the dot-com bubble. Then we didn't see it again here till 2018, and then multiple times here. So solid level, pretty low here overall on average. If we do retest that, I would expect that to be the bottom, and I do expect that to get retested if we see a move down like I'm expecting in the SPY and the NASDAQ. I will highlight one more time, though, we are seeing slightly bullish momentum here on the MACD. So keep an eye on that. I'm not jumping into my shorts right away until we see the MACD roll over, at least in some of these longer term time frames. Moving over to the number of stocks above their 200-day moving average on the weekly chart, you can see we're coming right up to that 144 EMA. Looks pretty overbought. Momentum is very strong, getting almost overbought here on the RSI, which is unusual for a chart like this. These ratios don't seem to get overbought very often, but it is getting pretty close here. Momentum is very strong. I would expect this to start to roll over similarly that we saw here, 4 big weeks of upward movement. And then we started to cool off and sell off, 4 big weeks of upward movement. And then I expect that to cool off and sell off. So once that upward movement ended, I will say that the candle pattern here at the top does look a little bit different. You could certainly argue that this weak doji that we had here is kind of like the same hammer that we had here. And if this falls off, then it's going to be basically a repeat of this previous down move. And it should be pretty violent. I don't necessarily know that we're going to come back and retest these bottoms here on this specific chart, but it does seem like we're due for a little bit of a correction, even if we're going to go higher later. Looking at JNK on the weekly chart, you can see we're basically at those COVID lows here on JNK. Of course, there was very little yields to be had on treasuries during the COVID lows. And that's partly why I think JNK recovered quite fast. The yields on JNK were still pretty healthy compared to the rest of the market, but we're coming back into that low because of the Fed hiking cycle. And because of the aggressiveness of the Fed hiking cycle, it certainly would not surprise me that JNK is going to go a little bit lower. And if that does happen, that should spell lower lows for the NASDAQ. The structure is still very bearish, and I still would want to see a solid double bottom here, a full bottoming formation on JNK. So one big move down, come back into that 87.50 range, finish that bottom, and then at some point next year, get a continuation to the upside, which should correlate with the bottoms in the rest of the markets that we've been talking about. Moving over to TLT on the longer term chart, like I've been talking about, super oversold, been oversold for a very long time. Did get a little bit of a rally the last 2 weeks in a row. Hopefully we get a bit of a continuation or maybe a fail here, a double bottom and a move up, just like the rest of the charts that we've been talking about. TLT is a little bit unique in the fact that it sold off so dramatically, and this is an asset that doesn't usually do sell-offs in that same kind of way. This hasn't happened for at least 2 decades in terms of sell-offs. We had a pretty big sell-off here in 2008. We almost touched those same lows here recently, but we were much lower at the start, only at 122, whereas during COVID we were at 171. So huge sell-off in TLT. Certainly could be the bottom. But I wouldn't mind seeing a nice solid double bottom, finish this bottoming formation, then a continuation sideways, and then we can reestablish the ranges of where we expect TLT to be in the future. Moving over to DXY, the dollar, on the weekly chart, you can see we've had 4 weeks of negative momentum. Doesn't seem like that's slowing down. We were very overbought here. I wouldn't expect this to stop before we hit the 55 EMA, which is currently at 102.60. Certainly not impossible that we get a slight move higher after this huge red bar that we had 2 weeks ago, just on maybe one more week of retrace and then a continuation down. If that does happen, then that might help out stocks at least a little bit, which should improve the chances of a double bottom versus a lower low in stocks. Moving over to the VIX, the volatility index for the S&P 500 on the weekly chart, you can see we've had many weeks in a row of downward movement, similar to what we had here in July. But we're coming into this support level, which is the same slope that we had here at the previous support before we made these new lows. And I really think that this is going to be the bottom here for the VIX, at least in the short term. Certainly seems like it's setting up for a rally back up into this 29 range, which would be a nice move down in stocks and hopefully gets us to that bottoming formation. And then we can be done with this consistent downtrend that we've been experiencing. One more thing before we close out here. Economic data coming out this week. Not a whole lot. We do have durable goods on Wednesday. Initial jobless claims at 8:30. I do expect that to come out slightly higher than expected. I think we've had some bigger job cuts than previously expected. We also have PMI and U.S. services PMI, new home sales, which I expect to be slightly lower than expectations. And then the big one here, we have FOMC minutes. And if they come out hawkish here, you should expect the markets to sell off into the Thanksgiving holiday. If you want to see a little bit more about my personal portfolio going into next week, definitely check out my Friday video where I went in depth on my current positions. Definitely comment down below where you think the market is going and if we're going to find a bottom or are we actually continuing higher from here. I guess it could go either way, but it just seems more likely that we're going to the downside. Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.